Now that we understand what a journal entry should look like and include, and how to translate business transactions into journal entries, we will take a look at transaction number 2 in case in point 3-1. On March 2nd, Nathan's Donut School pays $20,000 for baking equipment. So we need to look at this transaction using our 3-step process to analyze transactions. First, we need to determine which accounts have been impacted. So Nathan's Donut School is paying $20,000 for baking equipment. Equipment is going to increase by $20,000, and we're paying for that equipment. So cash is going to decrease by $20,000. We need to determine by how much each account has increased or decreased, $20,000. Determine if these accounts must be debited or credited based on the account type. So we're talking about equipment. Equipment is an asset. Assets are increased with a debit. The other account we're talking about is cash. Cash is also an asset. Assets are decreased with a credit. So we will have a debit to equipment and a credit to our cash of $20,000. We will include the date and a little memo about what this transaction is recording.